Focus brought to you by IG, taking a look today at the relationship between dollar and Bitcoin. What could be next for the US dollar, given all the upside that Bitcoin's seen over the course of the last 12 months, but especially recently, surging past $45,000 for the first time, going back to, the early part, the middle part of 2022. So well over a year it's been since Bitcoin has been at these price levels in US dollar terms, and that'll come up a lot. You're going to learn a lot in today's show in terms of how to price Bitcoin in different ways. But what's been interesting is in the short term, to start 2024, Bitcoin has seen some upside and US dollar has seen some upside. And it got my gears shifting of, do these markets have to be inverses? Because they've been inverses over the course of the last couple of years. You see, generally speaking, looking at general trends here, it's not, as precise as every single day Bitcoin's gone up, US dollar's gone down, and vice versa. But you look at general trends and you look at the upside that Bitcoin had in the middle part of 2020 throughout 2021, and you see that dollar was moving towards its lows at that point. And the dollar that we're looking at right now is the basket, the UUP ETF product against, the yen and the pound and the euro and everything else. But we're going to dive deeper into those specific relationships in just a second. And then you see throughout 2022, the downside, the crash in Bitcoin, and the historic upside that we saw in US dollar. And so you might think to yourself, okay, well, broadly speaking, these are inverses. One moves up, the other moves down. One moves down, the other moves up. And you can see red correlation points to, that's negative correlation, that points to an inverse relationship. And it has been red or negative or inverse most of the time, but there have been some brief periods. And I thought this is really interesting. The correlation between Bitcoin and dollar has actually turned positive in the last couple of weeks here for the first time in multiple years. And so this begs the question, is the relationship changing? Which, of course, is probably the sexier headline. Oh, Bitcoin and US dollar correlation goes positive, relationships changing, and here's why. And we'll cover that potential. Or are they uncorrelated? Because even though it's been majority red, it's been majority negative inverse correlation here, it's not been, negative 0.6, 0.7, 0.8 correlation. It's been hovering between negative 0.1 and 0.5, which is still relatively significant, but it doesn't necessarily scream direct inverse to me. So let's dissect a little bit of this, but first go into the Bitcoin price action, because the market that's up around 200% in the last year, going from around 15K to hitting 45K in recent trade. And that's some significant upside alongside what has been in the same time frame, depending on the forex pair, but at least unchanged to strong type of action for this U.S. dollar. Looking here against the yen, dollar in that same time frame positive against the Japanese yen, major currency globally. And in the last couple of days, the start of 2024, you can see starting to potentially surge again. It's put together a couple of bullish days here and has a lot of people wondering, especially trading dollar against the euro has turned over as well. So is the pound in the first couple of days of 2024. Is the dollar starting to gain back what it lost in the last couple of months of 2023? And again, that got my gears shifting to, can both move higher at the same time? Now, let's look at the theoretical relationship here, because you think about the fact that Bitcoin wherever you trade it or wherever you look at it, it is often given the denominator of USD, US dollar, or USDC, US dollar coin, or USDT, which is Tether, another US dollar based stable coin that is meant to track the dollar. And so essentially is a digital stand-in for the US dollar. So all three of these essentially being US dollar. And so if Bitcoin moves up, does that denominator have to go down? It might look like it, but theoretically, of course not. Of course, you can think of the instance of Bitcoin moving up and that denominator just staying put. Now, of course, your USDC and your USDT are supposed to stay one for one with USD. Now, that being said, USD can move higher or lower against euro, pound, yen, all those different pieces. We'll get to that in a second. But of course, yeah, you could see an environment where Bitcoin's moving higher or lower and dollar is just staying put. But what I really want to look into is the potential outlook for them both to be moving higher or them both to be moving lower as the correlation has turned over. And I thought that a nice example of how this would look if in 2024, let's say, both markets are bullish, Bitcoin and US dollar, or both markets are bearish. They could both obviously give ground. And this is crude oil. And people maybe don't think about something like crude oil, a commodity, as being priced in USD because maybe it doesn't say on your chart or platform, crude oil / with the denominator USD. But of course, the crude oil futures that we primarily look at here in the US are priced in US dollars. And so you might think the same thing. Well, okay, so then when crude oil is moving higher, that dollar is moving lower. Or a lot of people will say, crude oil is up 2% today because the dollar is weakening. And of course, it can have an effect, but the US dollar would have to weaken a pretty good amount for example, crude oil in 2021 to go from $50 a barrel to over $100 a barrel by the start of 2022 there. And in fact, in this case study, US dollar actually appreciated in that same time frame. And then both markets in the end of 2022, the start of 23, moved lower together. And they've had a relatively positive correlation on into the present. They're kind of moving higher and lower together at various periods. And so it lets you know just because a market's priced in dollars doesn't mean it has to move in inverse relationship, although all else equal. Again, you say that, the dollar is weakening, then maybe crude oil price against dollar is moving up. And if the dollar is strengthening, if nothing's happening in crude oil, then maybe the crude oil price is moving lower versus the dollar. But same as crypto, same as commodities, there's usually a prevailing story that's going on in both that market, whether it's Bitcoin or crude oil, and in the forex market. And here you have, I thought this was really interesting, taking a look at Bitcoin priced in Australian dollar, euro, and pound, and you see how different it can look. You see in the pound, Bitcoin has been relatively more range bound than in the euro and then in the Australian dollar. And that makes sense. Over the course of the last couple of years, euro and especially Aussie have been more volatile than the British pound. And so if you're buying Bitcoin in Australian dollars, then you could have bigger upside and bigger losses given that more volatile pairing. And you're seeing different price points. And so Bitcoin doesn't have to be priced in US dollars. It can return more or less depending on the currency exposure. How do you change that currency exposure? Let's say it's 2024 and you've got an outlook that's bullish Bitcoin and bullish US dollar. Well, you can buy your Bitcoin versus the USD, USDC, or USDT, whatever is relevant to where you trade. But then you can also go in there and you could buy your USD versus the euro. And so what happens there is you have Bitcoin versus USD, and then you have a short, let's say, euro versus USD position. The US dollars cancel out, and now you're long Bitcoin against euro. And so, I mean, a simpler way of thinking of it is I'm buying Bitcoin and I'm buying dollars because I'm bullish both. If you're bullish Bitcoin and you're bearish US dollar, well, then you do have an inherent, when you buy Bitcoin versus USD or USDC or USDT, you do have an inherent, long short exposure. But like we said, it's not that strong. And so you could keep that no position in USD outside of just that Bitcoin position, or you could also sell dollar versus euro or pound or Australian dollar. And so a couple different ways for you to look at crypto and traditional currency markets. The outlook here in 2024, of course, have no clue what this year is going to bring. But I will say traditionally or historically, that is, Bitcoin has had an annual volatility that can be more than 100%, so quite volatile, while US dollar is usually in the 5 to 20% range. And that's on an annual basis, appreciating or depreciating by 100% or more in Bitcoin's case, or 5 to 20% in US dollars case. And so you can match those up. If you want less volatility, then maybe you do look at a pound position, and or a Swiss franc has been historically less volatile with your Bitcoin. If you want, more volatility, you can look at your Bitcoin and throwing in that Aussie, so to speak, which has been a higher volatility piece. But a lot to look forward to here in 2024, and a lot of different ways to look at cryptocurrency and forex.